Leave well enough alone. That's the word at the start of OPEC's mid-year meeting in Vienna. The 12-nation group says its daily quota of 24.5 million barrels a day is fine for the remainder of the year. Oil ministers went out of their way to avoid talk of production, not to upset the recent price rally. One point of dispute, naming a new Secretary General. Iran is pushing its candidate, even though most support Venezuela's former oil minister. The news on production giving prices a good boost. North Sea Brent for July delivery up 27 cents a barrel to $16.62. Joining me now to provide his view on whether oil prices can go even higher is Tom James. He's oil analyst with Credit Lyonnais here in London. Tom, welcome back to the program.
Good evening.
First off, I almost have to rub my eyes when I look at the news. I see that all members are getting along, no arguments, and they jump in and roll over their agreement. It's pretty unusual.
Pretty unusual. Probably the most amicable meeting, well, certainly in the past 5 years, for certain. It's been very quiet, very smooth meeting, and well, they've skipped the September meeting, which most people expected they'd take. So obviously they're very comfortable with the current market situation.
Do you think the market's comfortable where we are right now? And what does that mean for prices down the road?
Well, at the moment, we're pretty comfortable around the $16 level for the Brent. WTI at the moment is being affected by a very local WTI supply problem, which is pushing prices up in the NYMEX futures market in New York. So that's being knocked out of line, shall we say. I think the fourth quarter demand figures from ourselves and from other analysts seem to be very positive for the market. Maybe looking to stabilize around the sort of $18 level, certainly.
Well, first off, we were saying the big question was the second quarter, where we usually see weakness. Now they're saying that we might see weakness in the third quarter, but demand seems fairly solid. So do you see a rise from this point in the third quarter, or we have to wait till the fourth quarter to see a jump from this level?
Well, on the short term, I think people are looking for maybe a little bit of a setback towards the end of the third quarter, just because of the American market at the moment is too strong. But if you take the third quarter, fourth quarter, we are looking for steady increases in prices. Demand looks good.
Okay, what do you think is going to be a problem for OPEC to cross that next hurdle, and that's with Iraq, the cloud of Iraq hanging down the horizon? Because that might hit, in fact, when they have to look at the quota situation again in the first quarter of '95.
Yeah, Iran actually came out today and said that they were, well, Iran and Iraq also made a statement saying that they were looking forward to bringing their oil back onto the market this year. Our timetable is more for this time next year. The UN weapons inspectors' work won't finish until the end of this year. Then, of course, Iraq still hasn't accepted the current oil sale proposal. So you are looking for maybe 9 to 12 months down the line. That's, hopefully then Saudi will consider cutting back. That's the real linchpin for the next hurdle as far as OPEC meetings go.
Well, right now it seems like Saudi Arabia and Iran are getting along quite well. Have they come to terms on the fact that a price at this level is decent because it doesn't really hurt demand, but it actually brings enough revenue in for some of the Arab countries that are actually hurting right now?
Well, Iran has actually said they don't like the current oil price, but certainly the situation between Saudi and Iran itself seems to be very good. In fact, the Iranians said that their relationship with Saudi at the OPEC meeting was very good, and I quote that. That was the Iranian oil minister. So the political situation seems to be a little better. But Iran isn't comfortable with the oil price because they have still technical difficulties with their oil field, so they're not being able to compensate some extra revenue.
So clear sailing for the next 9 months at least?
Yes.
Very good. Tom James, thanks very much for joining us again.
Thank you.
Tom James of Credit Lyonnais. Bolivia and Brazil have plans to build a 2,300-kilometer natural gas pipeline between Santa Cruz and Sao Paulo. The cost is estimated at $3 billion, and the two will seek outside investment.
We already have a contract signed between Petrobras and the Bolivian oil company. Now we are working together in order to find our external investors, and we are trying to attract, and we have already some signals of interest from the biggest world companies in gas.
Cosio says he hopes to have some final decisions